Hey everyone, thanks for tuning in to part 2 of this tax series. In part 3, we will do a tax return together. However, on this video, we're going to talk about common tax misconceptions, answer some questions, and debunk common myths. First and foremost, I just want to say that the CRA will not contact you by phone or by text or by email. They will always mail you snail mail. If you get a call to log into a website or that you owe money, the best thing to do is call CRA yourself and ask them, or log into the CRA website. Make sure you check that it's a secured site from the government of Canada and you can see what you owe. A lot of people scam trying to be the CRA, so just remember they will only contact you by mail. Okay, so now that that's out of the way, let's start with my favorite one. I've read this one a lot and got a few comments about it. If I get a raise, I'm going to be in a higher tax bracket and pay a lot more in taxes. I'm going to end up taking home less money. This is a very common misconception people have about how our taxes are calculated. How the government calculates taxes is on a progressive basis. That means the government breaks your income out into buckets, and each bucket is taxed at a different rate. The only confusing part about this though is Canada taxes you federally and has its own buckets with its own rates, and your province that you live in, so in my case, Ontario, provincially have their own buckets and rates. How you calculate your taxes is by adding both of the totals. So you can see here on the screen, federally, on the first $48,000 you make, you're gonna owe 15% in taxes. On the next $48,000 that you make, you would owe 21% tax on that. In the next bucket, you would owe 26%, and so on. In the same way, in Ontario, in the first $45,000 you make, you get taxed 6% by the province. In the next bucket, you're taxed 9%, and so on. It sounds like a lot of numbers, but let's just do an example to make this a lot more clear. Say you make $45,000 in the city of Toronto. In terms of federal taxes, you would fit firmly in bucket 1, between 0 and 48,000. That tax at 15% times 45,000 is $6,750. To calculate your Ontario tax, you will see that you made more than bucket 1, so the remaining salary would fall into bucket 2, and that remainder gets taxed at bucket 2 rates. So for the first $44,740 you made in Ontario, that gets taxed at 6%, and the remaining $260 gets taxed at 9%. Your total Ontario tax is about $2,480. Your total tax on $45,000 is about $9,200 before any tax credits are applied. So you can see here how the bucket system works. Once you fill up one bucket, you go to the next bucket, and then you go to the next bucket, and so on. Let's say you got a raise from your job to $60,000 a year in Toronto. Congrats on the raise. Let's calculate your new tax owing. Well, federally, you would fill up bucket 1 and the remaining amount would go into bucket 2. By multiplying the amounts by the tax rate for each bucket, on $60,000, you would owe $9,600 to the government of Canada. Provincially, it's the same idea. You would fill up bucket 1, the rest would go into bucket 2, and your tax to Ontario would be about $3,900. So on $60K, before any tax credits, you would owe about $13,500. The conclusion to take away from this is from a $15,000 raise, you only paid 8% more in taxes. And 2, you are almost always better off taking the raise. So this is a really common misconception. To further this, you always hear, if I make $100,000, well, the government is just going to take half anyway. In reality, following this bucket system, federally you'd fill up bucket 1, you'd fill up bucket 2, and the remaining amount would go in bucket 3. To the great country of Canada, you would owe $18,000 in taxes. Following the same calculation in Ontario, you'd fill up bucket 1, 2, and have the leftover in 3, and you would be taxed almost $7,800. On a $100,000 salary before any tax credits, you would only be taxed about $25,700. Yes, the 100K bucket, aka bucket 3, is taxed at almost 40%, but that does not mean your whole amount is. One of my favorite myths, and probably something you've heard a lot, is, oh, the company only did this because it's a write-off. It's a write-off.
Stereo now? It's a write-off for them. How is it a write-off?
They just write it off.
Write it off what?
Jerry, all these big companies, they write off everything.
You don't even know what a write-off is.
Do you?
No, I don't.
But they do. And they're the ones writing it off.
Wish I had the last 20 seconds of my life back.
A tax write-off is a business expense that a company incurs to make profits. For example, if you take a client out to a Raptors game to try to close a deal, it can be listed as an entertainment expense. However, taking your buddies to the Raptors game to have a good time does not help you make profits. Therefore, it is not a write-off. Yes, the company can deduct the Raptors tickets from their revenues, but you have to remember, they spent real cash to buy those tickets. If you made $10,000, but you spent $1,000 on the Raptors tickets, your profit is $9,000, right? The 10 minus the 1. At this level, you're taxed 15%. So the tax on $10,000, if you never bought the tickets at all, is $1,500, right? 10,000 times 15. And tax on $9,000 is $1,350. The company had to spend $1,000 in real cash, in real money, to save $150 on taxes. You can see how a write-off doesn't always make sense. While some write-offs can be more impactful on taxes, this is a rough example to remember. You always have to look at the overall big picture. Another common question that I've been asked, and this is probably the most popular, hey man, what can I do to get a bigger refund and avoid paying taxes? Okay, well first off, you can't avoid paying tax, but let's look at the stuff you might be able to do to increase your refund. Since the vast majority of people are employees, aka you get a T4, your options are kind of limited. So let's talk about the things you can do. You can make a charitable donation and receive a tax credit for it. One really great thing people do is contributing to your RRSP. We'll talk about those in another video because that's a great topic as well. An RRSP is a great way to build retirement savings and lower your taxable income. There are a lot of rules, but basically whatever you contribute into the RRSP, you get a deduction from your income. So if you had 40 grand and you put $1,000 in your RRSP, then the amount that gets taxed is $39,000. This incentive was put in place by the government because they really encourage people to contribute to their retirement, so they're giving you a tax credit for doing it. It's kind of a double win for you. So everyone, if they can, should take advantage of it. Up to a limit, you can deduct fees incurred for nannies, daycares, camps, etc. if you take care of dependents. How much of a tax credit you get will depend on how old your kids are. Related to this, one big question people ask is, can I deduct my home office expenses or my car, anything else on my tax return? Well, the answer is yes and no. To deduct these expenses, well, you can do it, but first you have to get a form called the T2200 signed by your employer. This form is an acknowledgement from your employer that, hey, this person was required to use their home office, they were required to use their own personal car, their personal phone to do their job, and they were not reimbursed for it. Only when this is signed and in your possession is when you can claim those expenses on your tax return. This might be really, really important now during the COVID situation because many of us are working from home, so be sure to ask your employer about the signed form. When you claim home office expenses, you can deduct things like your utilities, your heating, your maintenance fees, but you can't claim your mortgage payments or the interest on that, your property taxes or home insurance. It's also a prorated amount to the size of your home office. So if your house is 2,000 square feet and your office is 400 square feet, you can only claim 20% of the total. With your phone, it's the same idea. You take your phone bill and prorate it for the percent of the time it was for business versus pleasure. You can also claim a vehicle if applicable. If you have to drive to clients, for example, but aren't reimbursed, you can claim some of the auto expenses prorated on how many kilometers you drove for work and how many you drove overall. Also note, just like I mentioned in the earlier video, the CRA can audit you about this, so you need to be pretty diligent about claiming your expenses and keeping the proof. Again, you can only make these deductions if they were expenses that were not reimbursed to you, and you have to have a signed 2200 form filled out by your employer. The CRA always audits this section, so you need to be careful. Finally, the last thing I want to talk about is tax credits and how they work. So there are two kinds of tax credits, refundable and non-refundable. Once your tax bill is calculated and you see how much you owe, you can use tax credits to lower that amount. Non-refundable tax credits mean you can use those credits up to how much tax you owe. So if you owe $5,000 in taxes, you can only use up to 5,000 non-refundable tax credits, even if you have more. Hence the name. You can't use those tax credits to get a refund. Obviously then, refundable tax credits do let you go in excess of the 5,000, so you can get a refund. There aren't too many refundable tax credits available, and they really only apply if you make a low amount, but they change province by province. Non-refundable credits are way more common, so let's just talk about those. A big one you might think about is tuition credits. You've probably thought to yourself, I have like $40,000 in tuition I paid. How come I can't use that to get a big refund? How the tuition tax credit is calculated is it takes the tuition amount reported to CRA and you get multiplied by 15%. So if I paid 40 grand in tuition, the largest tax credit I can get from that is $6,000, 40,000 times 15%. But since my tax owing is only $5,000, I can't use the full $6,000 to get a refund. I can only use $5,000 of it. The extra $1,000 can be saved for later, but my tax will be zero from the non-refundable credit. There are a lot of non-refundable credits, as I mentioned: donations, caregiver credits, childcare credits, adoption expenses, the interest that you paid on your student loans. It's good to know what's available and what you have, because a lot of credits carry over, which means if you can't use it this year, you can use it next year. It's not a use it or lose it situation. Take a look at your tax return at the top where it says Schedule 1, Part A, Federal, Non-refundable credits, and you can see the ones that you use when you filed, and maybe you even missed some that you weren't sure about. I know this video didn't touch on everything and cover all the questions you may have had, but I just wanted to talk about the most common ones that were presented to me. In the future, I do plan on making more types of videos like this, question and answer, and about taxes as well. So if you had a question that wasn't answered or something specific, be sure to leave a comment and I will get back to you or put it in the next video. In part 3, coming later on, we will go over how to do a tax return together and you will see how easy it is. As always, I hope you learned something. I know there were a lot of numbers, but play around with some of the tax numbers yourself. And I really encourage you to look at your tax return and look up the schedules yourself, because I think after this video, it'll make a lot more sense about where these numbers come from. Thank you for the continuing support, and remember to like and comment, subscribe, and have a nice day.